Good morning, guys. Eli, blah. What's up, y'all? Get Microsoft Edge on my phone. No thanks. Where'd that just pop up from? 50 Shades of Bear. Is that a thing? There's Black Bear, Brown Bear, Polar Bear, Market Bear. I know about 4 shades of Market Bear. Market Bear, ladies and gentlemen, let's take a look at what's going on. We have a pretty bad route in the market. Monday market open, I wasn't here. I ended up sleeping because I was tired. And market didn't really do much. Just another down day. Just another manic down day. So dropping lower here. Looks like we're getting a little bit of a retrieval from the sell-off here. Bouncing into the 6,000 area. And we'll see what happens from there. Yeah, elevated volume here past a little bit. This is, Christmas week, so we should have a lower volume this week. This was a Wednesday or Thursday. Buying Tesla? Go buy yourself a Tesla, Elon. That would be good. Ooh, Tesla down 295. Wow. Thing broke down pretty far there. Could be some good buying down there, Eli. I don't mind that. Not really. Maybe nibble at it. I mean, it's gotten down here. Looks like it crossed that 300, which should be a pretty big psychological barrier. Crossed down a little bit. Volume was pretty low. Actually, pretty elevated for the day before Christmas. Pretty elevated, actually. Look what the markets did. They were about half of the previous day's volume. A little bit over half. This was well over half of previous day's volume. So that was actually a pretty elevated sell day for Tesla. They were just hiding it. Very interesting. But yeah, no, I think good buys on Tesla. We have earnings coming up in, not the trend line, 2/6. So earnings coming up in about a month and a week. We'll probably get some good buys into earnings, and we'll see if earnings remain strong, which I anticipate they would. I don't see why Tesla would. They're basically just churning out Model 3s left and right, so I don't see why not. What else is going on here today? Got a couple actually 30 seconds till the market opens. Sorry guys, just literally waking up here. Pre-market movers, we got a couple things up pretty good percentages. Rita on very low volume, up 60% to $77, which is even above here, so that's pretty good on Rita. SFET, DMAC is technology says anyone in UVXY. UVXY. Wow. What is that? I'm not sure what UVXY is. Looks like an ETF. Oh, Ultra VIX short. Oh, no wonder. It goes from 2.4 billion to 35. He's going to compensate tax, which would get profits low. Why would he do that? That's weird. Hold on a second. All right, I'm back. Looks like the market's getting bought up here a little bit. Where's my mouse go? I think my mouse just died. Mouse is dead. Must pick up alternative mouse. There we go. All right, good little buy up this morning here. Volume is obviously elevated. We just opened, so it's gonna be pretty big. Already got 7,700 shares. It looks like they're buying it back up through yesterday's holiday session. All right, what's on my list? What's working? We got Twitter here up 4%. That's not Twitter. That is Twitter. Let's see here. This is why I don't use this damn mouse. Twitter, so far, not undercutting that large low, which is what you want to see. Market up 2.16% on the NASDAQ. That's pretty good there. AMRN, Chesapeake Energy. I don't even know why I follow that thing anymore. It's just so far down. Now down under $2. Roku, Twilio, Amazon with a good day today. There's a longer term trend line we have on the weekly chart right there. Amazon got down to it. Looks like bounced off it a little bit. See what Apple is doing. Not a lot. Not a lot at all. Just chilling so far. See you, Eli. Don't get run over by any Teslas. So I saw an article on IBD regarding a global bear market. I wanted to go read that. Let's go check that out real quick. Bear market goes global. Will Dow Jones join the global bear market? The Nikkei crashed 5%, tumbling below 20,000 in the bear market status. Trying into bear market territory. And apparently there's a deal I can get. I hate that they do that. Boeing climbs a little bit there. Dow Jones is not in the bear market yet, ended up 19.1%, which I think you're just splitting hairs at that stage of the game. 18.2 in Paris. The FTSE 15.1. A little bit of strength in London. Oh, okay, they remain shut for the holiday on Wednesday. Okay. Hong Kong was closed on holiday? Really? They closed on Christmas in Hong Kong? I didn't know that. That's interesting. Amazon, Visa, Tesla climb. Yeah, Amazon with a strong day today at 4+%. Like I said, man, they've been picking at this thing all the way down. I'm actually kind of shocked we got this far down if you look at the amount of picking they've been doing. All right, what do we got here? A goose up. Yeah, so a lot of indexes down about 20%. I haven't seen a lot of data. What's up, Mohammed? I haven't seen a lot of data on global bear markets. Markets are usually fairly local. And I haven't seen too much data on like global bear markets. Now we know about 2008. We know that was pretty much a global event. And that makes sense. The U.S. economy kind of basically stalled. The U.S. economy was like an airplane at 40,000 feet stalling. And the rest of the world is essentially tethered to us. So That made a lot of sense. Right now, I'm not sure. Not sure why we get such a reaction, unless we're reacting to the world, which could be possible as well. Maybe the world's leading this time. Hold on. And market's still rebounding this morning. Pretty good. 2.5% so far. That's not mad at that whatsoever. After yesterday's close. 204.5 Facebook. Yeah, Tesla having an interesting day today. Consumer spending was up. Oh, okay. You know what? I didn't see any headlines, man. I had my head has not been in the news lately, so. Well, so that, yeah, and see, that's the really weird thing about this bear market is that, I mean, there's some bear market. Well, I should say correction. There's some like corrective tendencies to the market, but like maybe recessionary tendencies. But should that lead to a bear market, which is a little interesting? I mean, really, it's interesting that we've actually hit bear market territory just based on what's going on with the U.S. economy now. I mean, there's a lot of fear out there, but there's no like full session. That's a good question. I think it's a full session today. That's a good question, though. To be honest with you, I think it is. Yeah, I think it's only holiday the day before Christmas. Yeah, day before Christmas, early market closed. Christmas Day is closed, and that's the last holiday of the year. And then 2018 we get, excuse me, or 2019 we have New Year's Day closed, and then Martin Luther King Day closed. So January 1st and January 15th, I think. But yeah, full day today. Full day today. So plenty of time to sell this thing off. Really is kind of in the end the question, I think. In the setup of the late 70s or the 30s, what do you think? So I was actually thinking about the 70s market. We don't have too many parallels to the 70s. The only bad things we have going for us is the trade war right now, which hopefully is temporary, and I just drew a blank on the other one. And our debt. That's it. We don't have high inflation. We don't have an oil embargo. As a matter of fact, we're a net exporter of oil. So if we had like a 1970s oil crisis type of a situation, we actually, if we felt like it, we could just sell the oil to ourselves and say screw the rest of the world, and then we would be self-sufficient in oil. But they wouldn't do that, free market and all. So we don't have the inflationary headway. We don't have the interest rate headway. We have no headway similar to the 1970s. And if you kind of look at it, we've been going through a history of bear markets over the past week or so, and we have a couple headways which have led to some bear markets, and we're in a bear market right now. But I don't know. This one seems a little different to me. There seems to be some boogeyman in the closet, if you will, almost like childhood nightmare situations like national debt. That's childhood nightmarish to an economist. Like if Ben Bernanke were to have nightmares, it would be about $20 trillion deficit, I think. that would be what would keep him up at night. So we do have those factors, but I mean, in reality, we have a very good, robust United States economy. So it seems a little strange that we're down so much, really, unless the whole majority of the bull market was a farce, which you could argue it was based on the federal quantitative easing. And I was actually having a discussion with my mom last night. And hold on a second. And we were talking about, well, I was talking, she was kind of listening. Talking about the market and how economies work. And I talked to you guys, I think Friday, about kind of how I view the money system is working currently. Is everything ends up in in the corporate funds, and the corporate funds have a hard time letting the profit out of those corporate funds, and so it doesn't make its way back into the economy, in the general economy. Um, but it's Ben who created the 20 trillion debt. Well, he created part of that, yeah, not all of it, but he created part of it. Um, well, the U.S. people did it. I mean, really, we elected the leaders, and we don't care about our personal debt. Why do we care about our national debt? So, like if you look at it's really intriguing. Like I've been kind of doing my preliminary taxes this year, looking at what my tax liability is going to be, looking for the maximum deductions I can take in this and that and the other thing, just as every other 350 million Americans do. And then I'm thinking to myself as I'm doing this, I'm like, one day this chicken's going to come to roost with us with all these tax cuts and this and that. And I'm going to think back at every deduction I tried to take, and like, not that it's a bad thing, but I don't know. It's like we all participate in this national system, but I'm not necessarily one of these people, but they don't like the national system. You know? It's like you participate in this life, in this world, in this country, at least in the United States. And it's so anti-government rhetoric here. Like it's insane. Like honestly, it's insane. We have a two-party system here in the U.S. There are Republicans and the Democrats, and there's some independents, sprinkled in the mix, but they're kind of like, yeah, no one cares. And then the government taxes you and spends tax money supposedly on things that would benefit you or people a little less fortunate than you, and spends on natural defense. But exactly, Blair, we're all greedy. We're all super selfish and super greedy. So we're blowing up this national debt. In the end, and I don't know when the end is. Maybe it's 200 billion or 200 trillion in debt. I've got no idea. No one knows when this bubble will burst, and it probably will be one of the biggest bursting bubbles of all time. It could last another 25, 35, 50 years. No one knows. I mean, a lot of people are scared because they're numbers and they have zeros behind them. But no one actually knows. I mean, the U.S. is still the world's default currency. Everything is still priced in dollars. So we don't know when this thing is going to bust. Everyone, tries to sound, magic poop cannon. I mean, he went on a rant the other day about 20 trillion debt. I'm like, dude, you do technical analysis. I'm like, why are you going on Twitter calling for a national debt crisis? I mean, we don't know what the numbers are. If you look at Greece as an example of a country that goes bankrupt because of debt, we still have a long way to go. We can still print a ton more money, still go much deeper in debt with maintaining that the number that Greece hit. At the same point in time, we are the currency basis for the world. And so we can print and continue to print, and where Greece cannot. Greece was a small wheel in the cog that was the EU, or is the EU, and it really didn't have the impetus that the U.S. does for printing money. We can pull ourselves out of a pretty big ass hole. And it's funny, I was talking to my mom last night. She was talking about, I don't know if you know about in the United States, these days there's a lot of talk about illegal immigration. And, my mom's 73 years old. She turned from a Democrat to a Republican, what seemed like overnight to me at least. I was asking her, why did you switch parties? Because all I heard was a bunch of bitching. And I'm like, why did you switch parties? And we started talking, and then illegal immigration comes up. She believes with them in illegal immigration, we spend way too much money. And that got me talking about the national debt, corporate tax cuts, things of that nature. And I'm like, all these little side things are truly distractions in the United States. In my opinion, I think they're all distractions. When you look at the U.S. budget, 50% of it is the military. But don't you touch our guns in the United States of America, whether they be small or super large. You can't touch with the guns, otherwise you're not patriotic. And that leads into a global power discussion as well. But illegal immigration is such a small slice of the pie. You look at what we argue with in the United States, what we spend most of our time squabbling over, it's such a minute portion of this budget, which is, a lot of people. Thank you, Paul. Thank you. That's right. Well, this was after dinner. After dinner, blah. Well, it's funny. Me and my mom. Well, she gets a little heated over political stuff, and I always challenge her, which no one likes to be. No one likes to be challenged. I've had some really nice discussions in the Slack chat room with some people that are on the right side of the spectrum. I'm on the left side of the spectrum. I'm not super left, but I definitely lean a little bit more liberal. I like to think of myself liberally or socially liberal, fiscally conservative, but I don't necessarily even believe with most of the fiscal conservative stuff that's going on these days. Like what we talked about the other day, the taxes being sucked up because, the tax breaks have essentially been, they eventually get sucked up by corporations, and the money system seems to end in corporations, seems to end within the corporations. We talked a little bit about this the other day. So we get tax cuts. Most of Americans spend their money. They don't really save a whole lot. And the ones that do put the money in the stock market, corporations put their money in the stock market. Everything ends up, eventually in the stock market. Speaking of which, we're reversing a little bit here. On the 5-minute chart, looking like dropping here a little bit. But if all or majority of countries collapse or default existing debt, who is going to take U.S. debt? U.S. dollars is eating the other currencies one by one. Well, I don't quite understand. Let me read that question again. If all or majority of countries collapsed or default existing debt. Oh, okay. Who's going to buy the U.S. dollars? That's a good point. And necessarily, I don't think a majority of countries are collapsing. I think there's 200 and 300 countries in the world, and we hear maybe one a year is having currency issues. I mean, you hear stuff out of England, but they're not going to default. Yeah, 195 countries in the world. So you hear, maybe one. We had, Venezuela with devaluation of currency. There's a couple in Africa, like one every year that seems to have a crazy inflation. Like Zimbabwe's been inflating for, I don't know, a decade or something like that. But I don't even think it has anything to do with it. Like if you look at the U.S. national debt, our biggest debtor is ourselves, which is a funny thing. U.S. national debt pie. If you look at it, it's actually us. China's like 6 or 8%. And I don't know which one of these is going to be accurate or current. But in the end, we're talking to ourselves about, how does this affect the markets? Right? That's what we're actually curious about. And in the end, I don't think it's a massive issue, but there seems to be a lot. There seems to be a lot of discussion about it. You're from Morocco. Does that count? No. Yeah, no, Morocco counts. It just doesn't count as much as others. But yeah, so it's intragovernmental portion. So we actually owe a lot to ourselves. So 5.4 billion as of 2016 is what we owe ourselves. So our national debt isn't even necessarily owed all to foreign entities, which a lot of people think it is. Federal debt spending. I typed in national debt. Weirdos. Right? U.S. national debt pie chart. Social Security is a big one. Department of Defense. Unemployment, welfare, other mandatory spending. Medicare is big. Medicaid. These are actually almost the same thing. But yeah, we are a debt spending nation. It has nothing to do with. Who owns? There we go. U.S. individuals and institutions, U.S. Social Security, Federal Reserve, U.S. Military Retirement Fund. So we own like 66% of our debt is internal. So, you have to ask yourself, and I haven't seen too much data done on this. I mean, the only people we're gonna like if we default on our stuff and we just keep printing money, like who do we hurt in reality? Oh, China's at 14.7. That seems like quite a bit. Anyway, it's kind of an interesting. At this point, it's an academic conversation. There's really nothing we can do about it. All we do is look at charts. And right now, it looks like we're bull flagging a little bit. We popped up higher. We're declining slowly on lower volume. That's a little bit of a bull flag. Even if U.S. owns debt to itself, it does not mean that it will not be paid. Well, that's where the printing comes from. I mean, we've only had 1 year of budgetary surplus or even non-deficit in I don't know how many years, 40, 50 years. Every other year's been a debtor year. Every year's been a debtor year. But, anyway. So, but how does that relate to the stock market, though? I mean, in reality, when you look at the federal government spending and the stock market, you have to think they're pretty closely correlated. Actually, if I go back to that chart, sorry guys, my crazy mouse is getting crazy. If we go back to this chart here, individuals, institutions, Social Security. I mean, this is a decent portion of our general economy is Social Security. My mom basically lives off Social Security. Federal Reserve. This is a weird one. Like you'd think we would just be able to eat this at some stage of the game. Like if we defaulted to the Federal Reserve, would they own us? I don't know how that works. I haven't seen anything on that. Yes, Military Retirement Fund. That's hopefully those payments will continue. I was thinking just the military. There was one that talked about defense. U.S. investors, 6.89 trillion. Foreign investors, 30% right there to foreign investors. I'm trying to look for like defense spending. So let's do like defense spending breakdown 2018. Breakdowns where I'm going to lose this Google search. That's a small thing. There we go. Oh, they're taking out trash? Okay, are you going to take it out or you want me to take it out? Huh?
Julie took it out for us.
Oh, Julie?
Yeah.
Oh, that's very nice. Yeah, she noticed I missed my trash last week. Defense health. So I'm looking at other programs. So 3.5, that's billion. So this goes to like Boeing. So we have a bunch that's, military personnel and appropriation. So, I mean, a good majority of this defense spending does go to private contractors in the U.S., and that does affect Lockheed Martin, Boeing, General Dynamics, just to name kind of some of the big ones. So there's a huge portion of this that does affect us in the markets here. And there's going to be IT in the mix. The Department of Defense is looking at giving Amazon a huge contract. Amazon was just up 4.5%, now 2.8%, so selling off a little bit there. So I was actually discussing this. I'm like, if we have a nice, slow deleveraging of the U.S. economy, now this is not meant to scare anyone. I don't think we're gonna do this. We're too, like you said, greedy. we're going to have a slow deleveraging for like 20 years. We're going to have to deleverage out of all of our expenditures, and that's going to affect a huge majority of corporations. And it's just going to mean, decreases in budget slowly over time, which I think would lead to, like right now we have a slightly inflationary economy. We look for 2% inflation rate, and I'm assuming they know what they're talking about with that 2%. You don't really have any other choice. But if we were to go into a slightly deflationary economy trying to pay off the national debt, and how would that end up being deflationary? Well, when you think about it, if we take all of our government spending and slowly start to cut it, that money, the federal government doesn't make its own pens and paper, it doesn't make the desks, it doesn't build the buildings. That all comes from the U.S. economy, and so all that spending that we do is spent within our economy, and the stock market's greatly affected by that. And so we would see probably a 1970s-ish type of economy, but just due to deflation or stagflation. I mean, I don't know what the longer term plan is with the debt, but anyway, that seems like a much more fun discussion than watching stocks go down for the 97th day in a row. At least what seems like the 97th day in a row. Anyone have anything to add to that? You think I'm on point? You think I'm weird and full of crap? Or why don't you guys leave a comment below, guys? I'll be back in a minute. Tell everyone goodbye in my house. Hold on. All right, I'm back. Paul chime in. Thanks, Paul. Long story short, it's going to be a rough year. Yeah, right now, I don't think that has necessarily a lot to do with the whole debt discussion, because we don't, the debt probably won't affect us this year. I think in the end, what's affecting us here is peak economy, which we basically have been the beneficiary of for since 2017, all the way down here. It was like 48.50. So if we get back down here towards 5,000, that would be wiping out the gains of 2017, 2018, which in theory, this should be the bump from the Trump tax cut plan that they put in motion. Some of the anticipation and then the implementation. And then you have the sell the news probably up here. If we get down to 5K, hopefully we don't. That would put us in a pretty bad spot, I think. I mean, right now things don't look very good in terms of market turning around immediately. Come on. And of course, there we go. So if we do get down here to 5K, let's say we do that, right? That puts us 35% down in a bear market. We talked about we could drop another 10 to 15%, which would put us at about 35%. And we've seen that in the past in bear markets. We've seen 35% bear markets. So I don't think that's out of the question. Let's look at the long-term Dow Jones charts. See, I want an interactive chart. Let's see if Yahoo will give us something. I mean, we've seen these max. What do you give me? 85. Let's go to weekly. You're gonna give me data? Data back to 85. So I don't know if I can really. 1987 stock market crash. That came right back. That just kind of slowly grinded right back without too much fanfare. Yeah, that's interesting right there. Yeah, see, I'm looking for like the 40s, 50s, and 60s. I need to find a good source for just super, super good charting for some of these longer term instruments. Okay, 79. Looks like Google goes back to 79, but I'm not sure if it'll let me actually chart it. Very well, doesn't look like it. Looks like we're popping back higher here a little bit. We kind of came back to the market open. It looks like we're curling back higher slightly. We see increased volume here on the sell-off right there. A little bit of a down bar, but looks like we're bouncing back. Nothing too crazy. Okay, maybe Macro Trends has it. It's a log scale chart? Look at that. Okay, Macro Trends has one. Let's see if... I hate this mouse. Let's see if we can use this macro trend chart. So it's a log scale, which I think this is pretty interesting. You see the scale of the 1929 crash. You look at the bear market in 2008, and it's nowhere near that significant. So here we have kind of a general market slide. This is the Dow, right? Okay, this is the Dow. From 8,000 all the way back to 2,000. Well, see, that's on a log scale chart. Let's see what... This is different than the S&P for sure. Oops. My pinky's got much more further reach. There we go. Usually charts the S&P. So here we kind of went from 1970 into 1980 through an interesting period here. So you'd think this would be the post-war boom. It ended in 1945. Not so different from Bitcoin crash. Well, not really. I mean, markets tend to do very similar things over and over again. Excuse me. And most of it's just due to human psychology. Whoops, didn't want to do that. So there's a large falling wedge there all the way down. So it started in 1965. Yeah, my typing could improve today. That's for sure. Oh, wow, 8:06 already? Darn it, I gotta go and do my Power Hour newsletter. Oh, yeah, see, I like this chart. Oh, I have the start. Okay, good. 62, 66. Yeah, see, why is this so different? I don't know why this one's so different. 60 to 80, basically a straight up down market for 10 years. I don't remember that. Not that I was alive, but I haven't seen too many charts representative of that. So look at this one, and his first one here is 50. Okay, so you got 57, topped in 65. So this would be the top over here in 65. Then this one says it comes right back up here in 67. Not indicative of what we're seeing on the S&P over here. So there's 60. Oh, okay. There's 65. Then it's 67, and then you start the slide from 67 in the S&P. Okay, that makes sense. Bear return duration 8 months. Crash of 69 to 70. So yeah, we crashed once, twice, 70, then 73 to 74, then 80 to 82. Yeah, we just kept continuing. But they call these each individual bear markets, at least in this situation. A little intriguing. This whole little bouncing structure here on the way down. Then you see there's a little trend line right there. I can't draw on this chart. Excuse me. All right, I guess I can't scroll. Anywho, I'm going to get out of here in a minute, guys. Any last minute questions on the market today? Anything you guys want me to look at a certain stock if you guys want to do that? We're still pretty deep in this market. Had a holiday on Friday, yesterday market was closed. Monday was a holiday, and we had a pretty big down day on Monday. Looks like today is a retracement of most of that. I'm not super excited about some of these moves today. This whole week should be low volume generally. I thought about just taking the week off so I could sleep in another hour. I only got a couple more days left, tomorrow and Friday. And then you have, right after that, you have New Year's on the 1st. So really back to full market strength, maybe not even the 2nd of January, probably even the 3rd or the Monday following, which looks like it would be the 8th. And so we're not going to be back to full market strength for a little bit. Yeah, 7th should be 100% full market strength. This may be partial market strength here after the new year. And it's going to do some traditional market trading, which is kind of garbage, depending on the year. And this year, I think, could be a little bit garbagey. Although within this time frame, we do have the possibility of a follow-through day. I never do discount the possibility of a follow-through day because it happens when you least expect it. And, maybe these are the kinds of markets where you least expect it, but we could get a follow-through day. I will say that the lower volume area here does bode well for a potential follow-through day. We had one, as a matter of fact, in 2015 on a low-volume holiday follow-through day. William O'Neill actually stepped in and said, hey, regardless of the rules and what you say, this is a follow-through day. So he kind of stepped in and gave some guidance in 2015, and that proved to be correct and advantageous. We'll see what happens here in 2018, 2019. So, all right, guys, I'm going to get out of here. Thanks for listening to me rant today. Join me tomorrow again. Thank you very much. I'll see you then. Have a good day.